All right, welcome back to the Jim of All Trades channel. Glad you made it by. My name's Jim. I'm a crypto trader and a Forex trader here to help you understand the market from an Elliott wave perspective. Welcome today, guys, to Theory Thursday. It's a day of the week where we're going to just highlight one aspect of Elliott wave theory. A lot of what I've experienced is a lot of people who have been in markets for a while have never been exposed to Elliott wave theory, or their exposure to Elliott wave theory comes from someone who really doesn't understand its proper application to the market. It leaves people with a bad taste in their mouth. And what I'm going to try to do over the next many Thursdays is just begin explaining Elliott wave theory and understanding. Helping you understand how to properly apply it, which is what we do on this channel. I've been doing it for years and become quite a specialist at it. And I'd love to have you guys join me. I want to invite you into the Discord if you learn to like what you're seeing here and understanding from what I'm teaching. I'd love to have you in the Discord. You have a warm invite. Just find the link to the Patreon, and we'll get you right in there. All right, with that said, I'm not here to give you any financial advice. Don't want to do that. I just want to show you how I look at the market. So let's jump in. As we think about Elliott wave theory, basically, I just want to help you understand just the basics today. And when I say the basics, I mean one main principle. Now, this guy named Elliott, back in the early 1900s, started studying markets, and he found out that markets like to move in varying degrees of fives and threes. Okay, that the market is made up of fives and threes. And if you can identify the fives and threes and put them together in patterns repetitious patterns that he saw over and over and over again, you begin to understand the way the market may be moving as a measurement of human psychology, which is ultimately what the theory was founded upon. That the psychological reaction to trading is what's being represented in the wave structures. And so that's what he studied. Anymore, to be honest with you, I don't think it's a representation of human psychology. I think it's a representation of manipulation of the markets by those who want to create psychology in you to take your money. So anyway, that's the way I kind of look at Elliott wave theory, or at least the way I look at the market. That there are big boys out there that want to take your money, and then there are all kinds of schemes that are used by their high frequency trading algorithms in the computers that are designed to trade against you, and they're designed to do things on the chart to make you let go of your money. So anyway, that said, knowing Elliott wave theory will help you see some of those schemes in real time and help you protect yourself against them. So let's jump in and let's just look at the fives and threes in the market. The first assertion here is that from Elliott wave theory is that the market moves in fives and threes. Okay, now it's not always easy to distinguish between the fives and threes, but certainly it's true. Let me get to a different chart that has a little bit more data here. Let's see. Find it right here. Sorry about that. There we go. There's a Coinbase chart of Bitcoin. Clear that chart. There we go. Let's just take a peek at this move here from the top. Okay. Let's just count the waves here. Okay. Now there's altering views here as to what's going on here, but ordinarily, I mean, if you just kind of look at the low hanging fruit, there's three waves right there. Okay. If you look at the low-hanging fruit of this wave, you got 1, 2, 3, 4, and 5. There, so there's a 5, there's a 3. Okay, just overall the major structures there. If you zoom out a little bit, you got a 1 and a 2 and a 3 and a 4 and a 5 right there. There's 5 waves. That looks pretty good. If you zoom in here, you got 1, 2, 3. You got a triangle. And then you've got 1, 2, 3. So that's what we call a WXY complex correction. Nevertheless, there's 3. And here you have a 3 that was preceded by 1, 2, 3, 4, 5. Even this wave right here, you can count it as 5 or 3. Let's see. 1, 2, 3. Oh, sorry. Let me try that again. So if I zoom in there. Let's try it again. 1, 2. Now you're going to have wave 3 is going to have 5 in it. 1, 2, 3, 4, 5, 4, 5. So there's 1, 2, 3, 4, 5. You could argue that this is 4 and this is an ending diag. There's any number of things you can do, but ultimately what we're looking at is the market just on large time frames, on small time frames, has 5s and 3s. Again, sometimes very hard to distinguish because of the nature of some of those 5-wave structures or 3-wave structures. Okay, so if we zoom into smaller time frames, what you're going to find is that you're going to see 5s and 3s across the small time frame. So I'm on the let's go to the 15-minute chart, for instance, and what you'll notice is that this move to the upside had 5 waves. Let's check it out. Let's count them here. We got 1, 2, 3, 4, 5 moves to the upside. Okay, and each one of those waves, if you'll notice the 1 and the 3 and the 5, well, you can count 5 waves within that. So if I go down to a smaller time frame, okay, and look at the waves within the waves, wave 1 will have 5 waves, and let's count it. 1, 2, 3, 4, 5, leading diag. Okay, let's count the 5 waves of wave 3 here. Let me put the 2 where it needs to go. There we go. And you've got 1, 2, 3, 4, and 5. There's your wave 3. And then you got 5 waves in wave 5. 1, 2. Let's see. You can do a running flat here. You could call that 3, 4, and 5. Or you could put the 3 here and have a running flat for wave 4. It doesn't matter. There's 5 waves there. Okay. So what you'll notice then, that as you impulse in one direction, as you begin trending in one direction, you'll notice that the 5s go in the direction of the impulse, whereas the 3s go in the opposite direction. In other words, after you get a 5, you get a 3. So let's check it out here. We got a 1, 2, 3, 4, 5. There's 5. And then what you'll see behind it is a 3-wave move to the downside. There's 3 waves in return. So we call that A, B, C. And right there is what we call the Elliott wave cycle, where you have a 5 followed by a 3. An impulsive wave followed by corrective wave. 5, 3, 5, 3. And you'll see that over and over again in the market. Okay, I mean, for instance, here you've got another impulse wave. If we zoom in to this wave, we would be able to count 5 waves in that on the very small degree. And then we got 3, 3, 5. So we got a 3-wave pullback right there. And there you go. You got a 5-wave and a 3-wave. 5 and 3, 5 and 3. That's called a 1, 2, 1, 2. In fact, that's a 1, 2, 1, 2, 1, 2. And another 1, 2. That really, what that does is precedes a very impulsive move. Okay? And that's exactly what happened there. And you see all the 3s. We had 1, 2, 3, 4, 5. 3 waves. 1, 2, 3, 4, 5, 3 waves. 1, 2. Now that actually could be 3, or that's 5 there. Yeah, that's a 5th wave. That's 1, 2, 3, 4, 5. That's an A, B, and a C wave, and the C wave gets 5 waves there. We talk about that in another day. But anyway, I'm just looking at the 5s and the 3s. There's 3. There's 5. Okay, so you'll see it over and over and over on every time frame. I could go down to the 1-minute chart. Let me go down to the 1-minute chart, and you'll see 5s and 3s all over the place. Let's just check it out quick. Where do we start? I mean, anywhere is fine. All right. Let's see. We ended here. We got a 1, 2, 3, 4, 5. Ending diag. A, B, C. Okay. Let's go. 1, 2, 3, 4, 5. A, B, C. Now this is tricky here. You've got a leading diag. No, sorry. That could be a corrective wave. That's a 3. and then a 3, and then a 5. Boom, right there. So you'll see that there's 5s and 3s all over the place. Okay, so 5s and 3s, guys, 5s and 3s. Elliott wave moves in 5s and 3s. And what you need to learn, what's next on the agenda, is you learn the combinations of those 5s and 3s. How do they go together and make larger known structures? For instance, a corrective wave in ABC is often made by a 5-3-5. So an ABC is 5 waves. Now it could be a diagonal like I've just drawn there, or it could be a more standard Elliott wave where you get 1, 2, 3, 4, 5, where 3 is the longest, 4 and 1 don't overlap like that, and then you have an A, B, and a C wave to follow. That's the main structure there. So, and then a zigzag is 1, 2, 3, 4, and 5. And all of a sudden, that becomes your A, that becomes a B, and that becomes a C. And there would be an example of a zigzag, which is what I think could be forming right here as a corrective move to the upside here. What you'll notice is that you have 1, 2, 3, 4, and 5. You have a potential triangle here for your B wave. So you got a potential triangle here. Okay, and now we're getting another 1, 2 in the middle of 3 right now. I'm expecting to flag out for 4 and go up for 5, and I'm thinking that this is a zigzag correction. And we're gonna come up somewhere between the 786 and the let's see what the 1-to-1 correspondence is between that wave, or even the 883, which is 4760. So we can apply Elliott and think, hey, there's an idea that this could be a zigzag, and once this gets up here to the target zone up here between the 786 and the 1-to-1 right there, I think 786 is plausible as well. Then we'd look for another wave to the downside, which would be the C wave, okay, of a larger correction where you have A, this is the B wave, 3 waves, A, B, C, and then 5 waves. So we need 5, 3, 5. And so you can begin to see that the market is made up of waves that are 5s and 3s, 5s and 3s, and they're put together like a puzzle, so to speak, and they create a picture that the market may do. And that's the difficulty of Elliott, is that you have to be good at seeing the patterns and seeing how they form together, so you can kind of put them together and form what we call an Elliott wave count, a count of the waves, and say, hey, here's a possible way to count these. And if it's the right way to count it, then we can kind of have a projection for where price might be going. It doesn't mean that price is going to do what I've drawn here. It's an idea to watch for. And that's the benefit of Elliott. It doesn't leave you blind in the future. It gives you something to look for. Nonetheless, I would probably, in this idea, look for a little bit more up. I think there's more up to go. And then we can look at the RSI and say, is the RSI telling the same story? And I think it is. We're starting to get overbought. We can pull back and make some divergence here, which is what we expect to see on an impulse wave. And so as it finalizes this last wave, then we'll look for the direction down. And you'll notice the RSI also is the shape of 3 as well. So I think this is a good potential that is indeed a zigzag with a triangle in the middle or a running flat in the middle, which we'll talk about later. But for you noobs to Elliott, and for those of you who have been around a while, I hope this video has been helpful to you, just so you can begin seeing the 5s and 3s of the market. Every Thursday, we're going to highlight some other aspect of Elliott wave, so you can kind of begin learning. If you'd like to learn about Elliott from a brand new and fresh set of videos over the last year and a half or so, I have a whole Discord full of educational materials where you can learn Elliott wave. You don't have to wait for those videos to come out every Thursday. So just come on to the Discord and you'll have access to the educational materials. If you want to learn some using a free live stream that I did years and years ago, about 4 or 5 years ago, you're welcome to find the playlist in my channel called Trading Night School. Hope that helps you as well. All right, guys. Well, there it is. Now, what do we think? What do we think's happening here for Bitcoin? Well, I think it's a very good possibility that we got a zigzag working. I see some. If that's the case, I see some more upside to go, which that kind of correlates with what I'm seeing in Ethereum as well. You can kind of see this, what people call head and shoulders forming here, where you have the 4 and the 5 and basically forming, and then this is the 1 and the 2, or the AB. Now let's go C. Okay, so we got a 3-wave move coming. It needs to find a finish line here and then come on down. I don't think it's quite done. I think it's got more up to go. So, but I think it's heading in that direction, and I think it could be finished soon, somewhere around the 618 to the 786 retrace of this wave. Then I'd look for another move to the downside. That's the way I'm thinking about it. At least that's an idea that I'm watching for. All right, you guys have a fantastic day. Hope that helps you as you think about markets. Start looking for the 5s and 3s. See if you can see them. See if you can spot them. They're all over the place. Talk to you later. Bye-bye.